All right, this is Canoo on the monthly chart, and I have a price target at $25. And I'll explain my target and how I got there towards the end of the video, but it's more or less that they are running out of cash. Exhibit 1. In recent weeks, they paid the SEC a fine of $1.5 million. Let's get into the video.
Welcome back, everyone. It's been a long road for electric vehicle maker Canoo, and the company has hit another speed bump again, a $1.5 million fine from the Securities and Exchange Commission. Still, though, the company, which has a small manufacturing plant in Bentonville, is working to scale up production of its vehicles for customers including NASA and Walmart. Arkansas Business has, of course, been following the company, and editor Lance Turner joining us now. Lance, all right, let's talk about this fine, $1.5 million. How big a deal is this to Canoo's future success?
Well, I'll tell you, this $1.5 million fine has been in the works for a few months now. Canoo actually announced it earlier this year. It really has more to do with Canoo's past than its future in some respects. Essentially, the SEC says that former executives, a CFO and a CEO, made unreasonable revenue projections, actually misleading investors about how much sales that the EV maker was going to be able to do just before Canoo went public in 2020. Two executives have then been temporarily banned from public company boards and also fined individually. And Canoo admits no wrongdoing in any of this, but it agreed to the $1.5 million fine to settle those allegations with the SEC.
Wow. All right. Well, Canoo made headlines, of course, in 2021 after it went public, announcing it would move its headquarters to Northwest Arkansas. How has the company fared since making that?
Well, it's been a little bit of a mixed bag for Canoo, which not only has ambitions in Arkansas, but also in Oklahoma, where it just purchased property for a major manufacturing operation and already has a battery module facility underway in Oklahoma as well. But this year, the company has touted deals with Walmart to buy a few thousand vehicles for the retailer there. In July, it delivered 3 astronaut transport vehicles to NASA for NASA's Artemis space program, and it expanded a partnership with the Department of Defense to develop advanced battery technologies for the military. In all, Canoo says it's got about $2.8 billion worth of orders in its pipeline right now.
But at the same time, and you reported on this a number of times, the company has signaled that getting enough cash on hand to feed all these operations has been a big challenge.
That's right. Yeah, this is a cash-intensive business. They are essentially trying to get a major manufacturing operation up from scratch, and so it's been burning through millions of dollars worth of cash to get those operations up and running. It actually finished the first quarter with $6.7 million in cash on hand. That sounds like a lot, but in the scale of what they're trying to do, it probably isn't as much as they need. And it also reported a $91 million quarterly loss. Meanwhile, the stock was nearly delisted from the NASDAQ earlier this year for trading below required minimums. We're going to know much more about how the company is doing in the second quarter when it reports its quarterly results.
Exhibit 2. They're running out of cash to fund their operations. Let's get into the article. This article is coming from The Motley Fool, Why Canoo Stock is Still Sinking. Last week, shares of the EV startup sold off after reporting a smaller than expected loss but continued cash burn, despite efforts to raise cash through equity sales and debt offerings. Alliance Global initiated coverage of Canoo. This was earlier this morning, with a buy rating and a $1.55 price target. That implies the analyst thinks Canoo stock will triple in value over the next 12 months. So why aren't investors more excited about the news? Well, according to the analyst, Canoo's growing production capacity and large order book, along with a unique modular design that distinguishes the company from competitors, are all points in its favor. Early this month, Canoo confirmed that its order book is worth at least $2.8 billion, representing orders for in excess of 60,000 vehicles. Management expects to have capacity sufficient to build 20,000 Canoo EVs by the end of this year and 40,000 by the end of next year. Expanding production capacity is all well and good, but it's also costing Canoo a lot of cash. At current run rates, the company is burning through more than $80 million per quarter. But at last report, Canoo had barely $61 million in cash available to it. Long term, things look promising for Canoo. Short term, though, Canoo could very well end up running out of money before it's able to make its long-term promise a reality. This, in a nutshell, is Canoo's biggest problem, and probably a big part of the reason why investors aren't reacting to Canoo's upgrade quite the way Alliance Global was probably hoping they'll react. All right, so for the bulls, short term, potentially, you have a floor at 41 cents. And that floor could be by way of potentially a double bottom. However, even if Canoo can see their reality materialize, one way or the other, they're going to need more cash. So you either go out of business or you get more cash through the financial markets. And if they do get more cash, they're going to issue more stock shares, which are going to dilute current shareholder value, which is going to cause the price to go down, right? All right, so how did I come up with my 25-cent target? For that, we have to go to the monthly chart. And I just took a measure move. This February candle, extended range red candle. If you just take that measure move, which is about 50 cents, and you plot it where it closed, and you go down 50%, you get 25 cents. Now, Alliance thinks that it can get to $1.55 in 12 months. However, if you go to the daily chart, price is going to have a hard time getting through this 90-cent daily sellers level. Price attempted to come to the area back in mid-July, but this signals that there is sellers just waiting to push price back down. Price couldn't even get to the, or not even near the zone before pulling away. So this level is going to be very strong if price continues to rise. Nevertheless, it could be a pop just to get in to push price down to increase their profits. So levels to watch: the 41-cent level, that is the current bottom. Top side, you have this daily sellers level at 90 cents. Be interested to see what happens through the rest of the year. Be sure I will report back with my findings on Canoo. Thanks for watching. Subscribe. Please like the video.